Let's speak now to Cornelia Meyer. She's an economist and chairman and CEO at energy advisory firm Meyer Resources. Welcome back to the programme, Cornelia. Now, the latest data shows just 5 commodity vessels crossed the Strait of Hormuz over the weekend. Are we looking at a de facto shutdown once again?
Good morning, Talbeth, and thank you so much for having me. Well, we're looking at lower traffic. Over the last 2-3 weeks, we saw a lot of ships going, or some ships going through, turning off transponders whilst they were going through. So there's very little that we really know how many went through, what went through. You saw Scott Bessent saying it was 9 million barrels a day. And other people doubt that very much. And certainly over the weekend, that traffic has come down.
Right, so if nobody can guarantee safe passage through the Strait of Hormuz, can the market really price oil with any confidence right now?
Well, it's interesting. You see, I've long maintained that the market has not been priced on fundamentals, but on sentiment. You hear a statement here, it goes, the price goes up, a statement there, the price goes down. So it's very hard to price it. I take it from the CEO of Saudi Aramco, who said that the world was missing 2.6 million barrels since the beginning of the conflict. That's a lot of oil. The world has also lived off inventories. The question is, how long can they live off inventories? But this being said, we have seen now, the last few weeks, more sort of ships going through, turning off transponders. We've also seen for the first time in a long time, China importing 200,000 barrels a day, which they immediately put into storage.
So the Gulf's biggest producers, Saudi Arabia and the UAE, are finding alternative ways to move crude around the strait. How much oil can they realistically keep flowing if the strait remains disrupted?
Well, it's very difficult. You see that Saudi has a pipeline from the east to the west coast, where 7 million barrels a day, 2 million barrels going to the refineries on the west coast, and 5 million barrels for export. They could go through the strait, through the Bab el Mandeb, but that's now effectively shut too. So the alternative route is the Suez Canal and the 2.5 million barrel a day Sumed pipeline through the Mediterranean, adding 40 days to the journey to Asia. You saw that there were 2, I think, tankers loaded in Ras Tanura, and they sort of went through the Strait of Hormuz and then were reloaded. The ships were the oil was then reloaded, ship to ship transferred to go elsewhere. You see Oman doing the same, but also using its 1.8, I guess at this point, million barrels a day capacity Habshan Fujairah pipeline.
Meanwhile, Europe's gas storage is already running below historical averages. How vulnerable is the continent if Hormuz disruptions continue into the winter?
Well, the world is vulnerable. It's not just the gas. It's not the gas storage. It's also the inventories. It's also product inventories. I mean, we see real issues with diesel, with jet fuel, and so on. But for Europe may look at the winter of discontent. They will be buying cargoes, LNG cargoes from the US, but it's huge competition between East Asia and China, Japan, Korea, Taiwan, and Europe, and the former are willing to pay more than the Europeans. So fasten your seatbelts in Europe.
Cornelia, we'll have to leave it there for now. Cornelia Meyer, thank you very much as always.